everyone, I'm Gurleen. I hope you're all doing well. A lot has happened over the course of the week as the Indian markets have taken a turn, and in today's video we'll be discussing the weekly outlook for the markets, and we'll also take a look at the trade plan for Monday, that is May 8th, 2023 for Nifty as well as Bank Nifty. We'll also discuss a few select stocks wherein good risk to reward opportunities are brewing up. So be sure to stick around till the end of the video and don't forget to hit the like and subscribe button and do ring the notification bell so that you never miss an update. So without any further ado, let's start by taking a look at the technical perspective of Nifty 50 on the weekly time frame. Now here on the weekly chart of Nifty, you can see that Nifty has registered a shooting star candlestick just around the resistance level of 18,180, which simply depicts that the bears snapped in and the prices were not able to sustain at the highs. And the candlestick holds relevance at this point because it has formed at a crucial resistance level that we estimated in the last weekly update, and all in all it implies that we might see some pressure in the markets. So Nifty has clearly been rejected from these previous highs, and this leg on the upside, which started from the harmonic potential reversal zone of 16,989, might be taking a halt now. Now let's take a look at the daily time frame to understand that what's the way ahead for the markets. So the RSI on the daily chart was in the overbought territory, and now you can see that it has started to cool off, and it does look like that the index is taking a breather. More or less, if you see, Nifty traded within the range of the candlestick that was registered in Thursday's trading session. Well, at the current levels, longs do not look very favorable and should only be considered above this level of 18,270. Also, it's likely that Nifty might consolidate within this range of 18,040 to 18,270, or if we do see a breakdown of this level of 18,040 on the downside, then Nifty can possibly test the levels of about 17,850 and the 200 simple moving average placed at the level of 17,695. Now let's take a look at the hourly time frame to understand the trading approach as well. Now there's an interesting development on the hourly charts. Now here it looks like we have a possible bull trap double top pattern, but the pattern has not been validated yet. And one thing to remember about the double tops is that the pattern gets triggered at the breakdown of the neckline, which in this case is placed at the levels of 18,040. So over here the trading approach is very simple, as Nifty is standing at the edge of the 40-hour moving average as well. So if Nifty breaks down this level of 18,040 along with the moving average, then it would call for a shorting opportunity, and in that case the double top pattern will also get active and a possible target towards the levels of 17,850 can be looked at. And in this case you can consider placing the invalidation or the stop loss level at the high of 18,270. On the flip side, if you are looking to build fresh positions, it's more of a wait and watch setup, as Nifty is trading at a crucial make or break level, and a confirmatory long trade would open up above this recent high, and in that case Nifty can probably head higher towards the levels of 18,350 to begin with. Now here the 40-hour exponential moving average is going to act as a deciding factor for the upcoming trend. Indeed, there are interesting times ahead. Now let's talk about the support and resistance levels for Nifty. So the support is placed at 17,820 followed by 17,695, whereas the resistance is placed at 18,180 followed by 18,270. Well, before hopping on to Bank Nifty, you might be wondering the backstory for the Hdfc twins to be at a negative of about 6%. Well, the explanation is simple. The MSCI announced that they'll be considering an adjustment factor of 0.5 for the merged entities weightage in the index. Now, this turned out to be a negative surprise for the companies at the back of the outflows being anticipated instead of the inflows, and the stocks saw a sharp selling in the trading session. Also, just to make it clear, it has nothing to do with the fundamentals of the company, and the fundamentals are still very strong. We'll be taking a look at the charts of both of these stocks in just a bit, so make sure you stick around till the end of the video to find out. Now if we take a look at the chart of Bank Nifty, all Bank Nifty needed was one last push of about 0.94% to reclaim the all-time high levels, but maybe the market markets had a different plan altogether. Now here you can see that Bank Nifty has registered a bearish candlestick from around the estimated level of 43,555. Now as we discussed in the last weekly update that Bank Nifty was trading near the supply zone over here, so a slowdown in the trend was anticipated and Bank Nifty has played in alignment with the same. Now here on the daily chart, if we see, Bank Nifty has registered a negative candlestick of about 2.34%, which is quite wide. So in the upcoming trading sessions, it's possible for Bank Nifty to consolidate within this wide range of 42,582 to 43,588 and form an inside bar setup, and thereafter might catch on to an aggressive trend at the breakout or the breakdown of this range. Now the immediate support levels for Bank Nifty are placed at the levels of 42,352 and 41,800, which happens to be a very important level for Bank Nifty. Also, if Bank Nifty continues to hold below this mark of 43,050 and also breaks down this level of 42,582, then it's very likely that Bank Nifty can continue to plummet to these levels that we just mentioned on the downside. With that being said, the question that pops up is that how can you capitalize upon the opportunities that might follow? Well, to understand that, let's take a look at the hourly time frame and also discuss the trading approach. So as we have seen quite a fierce decline in the index, and you can see that the RSI has also hit the 30 mark, though it hasn't entered into the oversold territory, so it's quite possible for Bank Nifty to pull back towards these moving averages, which might be followed by selling pressure towards the bottom of the range once again. So here the levels of 43,160 to 43,300 would act as a strong supply zone, and this pullback, if it emerges, can also be capitalized from a shorting point of view. Now if you're a directional trader, then you might have to wait for a clear trend to emerge. Well, let's outline the possibilities for that case as well. So if Bank Nifty breaks below this level of 42,582, then we can expect the index to test the levels of about 42,252 on the downside, and if that happens, you can consider the high of the breakdown candle or this previous candle as the stop loss or invalidation level. On the flip side, if Bank Nifty breaks above the zone of 43,555 to 43,740, only then we can expect a strong positive momentum unfolding in the index, though the chances of it are bleak, but will not rule out this possibility as well. So as the decline was driven by news, it's very important to let the setup unfold and respect the levels before hopping into any trade. Now let's talk about the support and resistance levels for Bank Nifty. So the support is placed at 42,352 followed by 41,800, and the resistance is placed at 43,160 followed by 43,300. Now let's move to stocks, starting with the update on Titan. So we had been discussing Titan over the recent weeks, and here you can see that after having broken out of this pivot B, Titan has now tested the estimated upside target of about 2732, and you can also see how beautifully it has closed just at the harmonic potential reversal zone. If we also take a look at the RSI, it looks overheated, and as of now, everything put together, it's likely for Titan to take a pause in the trend, or considering such a wide bar candlestick on the daily chart, Titan might as well consolidate within the same range. Well, that's the beauty of harmonics, that it lets you catch the trend and helps you to define clear entry and exit points so that you do not get stuck at the wrong side of the trade. Now moving on to the update on Bajaj Finance. If you remember, we've been tracking Bajaj Finance from the levels of 5,900, and as we discussed that there was a possibility of a double bottom formation. Now in the last few trading sessions, we have seen good momentum in this counter, and Bajaj Finance has achieved the final target of about 63.85. Now you can see that it is approaching a very strong supply zone, so it's time to be a little cautious and consider placing tight stop losses. Now let's talk about HDFC Bank. So in the last trading session, HDFC Bank plummeted around 5.91% from the all-time high levels, which was a news-driven event. Now if we take a look at the weekly time frame, we have an ascending trend line, and even if HDFC Bank continues to trend on the downside, this zone of 1540 to 1578 is going to act as a strong demand zone for the stock, and if we see a good volume action along with a reversal candlestick pattern, a probable normal long entry can be looked at. But as of now, from a trading point of view, HDFC Bank must be on the watch list as it is a wait and watch setup. On the chart of HDFC Limited as well, we have a similar setup wherein it's quite possible for the stock to hit the zone of 2600 to 2640 on the downside before the selling takes a pause. Now, this also suggests that this zone of 2600 to 2640 will act as a strong support for the stock, and in the near term, the resistance level can be considered at 2828. Now, there have been a lot of queries coming in around Kotak Bank, so let's also take a quick look at the same. Now, here you can see that Kotak Bank is approaching the near-term supply, and we have seen in the past as well that whenever the stock has approached this zone, a slowdown has come in. So here as well, it's time to be cautious as it's possible for the stock to retrace back towards the levels of 1848 to 1808, considering that it is near the supply zone. The last on the list is DLF, which looks stable and is a good bet from a trading point of view. So we had discussed DLF already in one of our videos when DLF broke out of this pivot B at 407.50. But for those of you who might have missed it, DLF is still trading at a very interesting point with 1:1 RR, and it's possible for DLF to inch higher towards the levels of 488 on a swing basis. And over here, a near-term stop loss level of about 370 can be considered at this counter. Well, let's see what the week holds ahead. Also, do let me know whether you're bullish or bearish on the markets. And on that note, it's Gurleen signing off. Until we meet again, have a good time.